Ladies and gentlemen, good day and welcome to the MSTC Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Deep Modi from Equirus Securities. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Equirus Securities, I welcome you all to Q4 FY26 earnings conference call of MSTC Limited. From the management side, we have with us today Mr. Manbendra Ghoshal, Chairman and Managing Director, Mr. Subrata Sarkar, Director of Finance, and Mr. Ajay Kumar Rai, Company Secretary. We will begin the call with the opening remarks from management, and then we will open the line for Q&A. I now hand over the call to Mr. Manbendra Ghoshal. Over to you, sir.
Thank you. Good morning, Deep. Good morning to all our esteemed stakeholders, and a warm welcome to this morning's investor conference. Despite a considerable amount of global macroeconomic uncertainty, it's my pleasure to be able to report that MSTC has been able to end the year with good numbers. We have achieved a figure of almost 370 crores from revenue from operations, which is the highest in the last 4 years. Your company has been in the process of consolidation over the last 2 years, and over this period has identified and taken positive action as to which segments of business activity we needed to grow out of and where we needed to increase our footprint, and also to identify areas which we believe are organically related to our core strengths and build upon. As a part of this, we are now in the final stages of exiting from the marketing and trading business, and coupled with the strategic disinvestment of FSNL at the time of the end of last fiscal, we are moving forward to be primarily an e-commerce company, foraying further into areas of creating electronic platforms. The two major such platforms that we are working on, the EPR ECP, which we have already developed, and the next part of our digital project line is a travel portal, which is also in the final developmental stages and which we expect to launch shortly. Now, apart from this, we are working on some further possibilities on similar lines, about which we'll be able to update you as they come to a firmer stage of production or completion. With respect to the financials, we have been able to maintain EBITDA percentage at a similar level year on, despite competition and with the overall global macroeconomic uncertainty looming over the last 2 quarters and the challenges of scaling up, we have still managed to maintain it at the same level. Apart from this, there has been financial impact on account of statutory obligations, about which our Director of Finance will touch upon later. What I'd like to emphasize is that these constraints notwithstanding, your company has been able to increase PAT levels year on year by about 23%, taking out the contribution of the one exceptional item of FY26. That is the piece of FSNL strategic disinvestment. Now, on the business outlook front, the ETP for EPR certificate has been developed and tested, with all necessary integrations also in place. The portal is ready and is now awaiting formal approval and launch for operation. As I have said earlier during other conferences, once the platform is operationalized, it would open the door for further commodities to be similarly onboarded for EPR certificate trading on the portal itself, and also accord an opportunity for us to bid for developing and operating more such portals and exchange platforms in the future. This would open up the vista of an entirely new business vertical for the company. On the same lines, we've been looking at what we think is a very promising opportunity of creating a seamless, mainly B2B portal for travel and logistics, covering the entire value chain of travel, accommodation, and associated services. This portal is also in its final stages of testing, and we expect to operationalize it shortly in the B2B space to begin with, and then extend segmental reach as we gain traction. We've named this offering as MSTC Smart Trend. Apart from this, we are working on some other areas, such as end-to-end transaction advisory for asset value realization for PSUs, government departments, and private entities. For this, we have tied up with SBI CAP to mutually work for providing such end-to-end solutions, leveraging each other's domain expertise. Our business development teams are also working on other major possibilities, which leverage our domain expertise and supplement the same with technology, including possibilities of AI wherever feasible and appropriate. In the context of our 50/50 joint venture with Mahindra MMR case, I am glad to inform you that the efforts put in by the management to streamline operations and optimize flows in terms of geographical feed patterns have delivered results. The financials for the last 3 quarters have been consistent and encouraging. Even though the net loss has been progressively reducing sequentially, we are still monitoring the operational financial parameters very closely, but we are hopeful that the positive trend will continue. Now, coming to some highlights for 25-26, 10 coal mine blocks, over 200 major metal blocks, significantly higher scrap, including quite a few plant sales, as well as coal linkage options. The order for MSTC obtained from Coal India Limited through competitive bidding, as well as mineral sales, that is principally iron ore, pellets, slimes, chrome ore, and so on. All of these have driven our higher e-commerce earnings for FY26. Now I'll request our Director of Finance, Shri Subrata Sarkar sir, to brief us on the financial numbers for 25-26.
So, very good morning to all of our esteemed investors who have reposed faith on this company. The time has been listed to the stock exchange. So, as our CMD explained to you that this is a very nice year and positive year for MSTC. So, I am pleased with the operational performance during 25-26. Company that has dealt 797.37 billion in terms of gross mercantile value that was transacted through our portal. Some of the highlights of the financial performance is that revenue from operations has achieved at 359.6 crore, which is highest in the last 4 years. EBITDA is 307.49 crore in 25-26. Vis-a-vis 260.04 crore in 24-25. Around increase of 18.2% on year-to-year basis. Percentage almost maintained the same in spite of the competition. PBT before exceptional item is 291.69 crore in 25-26, vis-a-vis 240.71 crore in 24-25. Appreciable increase. PAT without exceptional items is 221.69 crore in 25-26 as compared to 180.13 crore in 24-25. Reduction in impairment loss in investment in heavy MMRCL, rupees 1.44 crore. Previous year it was 10.06 crore. On a consolidated basis also, the same thing has repeated, except that PBT is also on the rise because of that reduction of the loss in MMRCL from 244.80 to 292.43, and PAT before exceptional items from 182.19 crore to 218.43 crore. So now there are certain business highlights. Business highlights like as already CMD sir explained, it has completed the coal mine auction and mineral block auction, and the basic impetus, from where we got the revenue is that the auction of the scrap, which has driven our e-commerce platform income. And this year we had developed a specialized portal for DGF for the quota allocation of gold bullion and other commodities. And recently we we have got an order to competitive bidding for Coal India Limited auction for Coal India Limited to open tender. Mineral sales are also high contributor, like iron ore, pellets, lime, and stone ore to our portal. And the way forward, as CMD explained, it will be our future bread earner will be which will add to our current revenue and propel the account is the EPR trading platform, and MSTC has also partnered with SBI Cap for advisory solutions, including e-call option services to various clients. And we are also developing new digital products that is travel and Upkaran also. These portals are in the advanced stage of development and expected to be launched shortly. And there is a thing that is the positive part that we are now even switching from the 110% BG that was almost secure, but still to have focused approach towards e-commerce domain. So we have decided to do this, and by first quarter of this year, it will be out of our business basket. Already out, but income will be out of our business basket. So now let us go to the standalone financials. So total revenue is 453.04 crore as compared to 387.50 crore, comprising of 453 comprising of marketing 1.49, e-commerce digital is 329.72 and others 121.8, with expenses just increased from 127.46 to 145.55. EBITDA stands at 307.49 as compared to 260.04. So far, overhead expenses are concerned, so what you can see from our detailed financials, there is not much increase in the employee expenses, employee cost expenses, but there are certain increase in the overhead because this year we have opened a corporate office at New Delhi. There are some things were there, and there is because of that only we are making a lot of focus and a lot of business that can translate into the actual revenue in the near future. We are hopeful for that, and depreciation almost remaining the same, and impairment loss appreciable decrease from 10.06 to 1.44. This year there is no exceptional income or expenditure, and with that PAT stands at 221.69 as compared to 402.98. Though before exceptional items, PBT has shown a great increase from 240.71 to 295.69, that is an increase of 22%. And in the segmental part, already explained, so we have got e-commerce breakup, that is e-auction is 321.9, e-procurement is 0.43, other income is 121.83, and marketing almost just getting out of our PB is 1.79. So this is the position, so for segmental reporting is concerned. And so what in the consolidated part, the main thing that we want to highlight, last year we had a share of loss of 5.97. This year it has reduced to 4.70. I would like to tell the investor that if you can see the quarter figure, it has reduced significantly in the fourth quarter. We have almost maintained the loss figure of 9 months of fiscal year to the whole fiscal year. So that is the effort given by the management to contain the losses. So with that, consolidated profit stands at 218.43 as compared to 407.07, and EPS stands at 21.03 as compared to 57.82 last year. Now coming to the detailed P&L statement of the standalone business, where that was I was explaining that employee benefit expenses has not increased much. It is 8.11, whereas other overhead has shown an increase, but it will have to happen because we have now a big corporate office at Delhi, and accordingly, you can see that there will be appreciable increase in the revenue also. So we have got a very robust figure of PBT before exceptional item 295.6 times, that is increase of around 23%. With that, I hand over the call for the Q&A and analysis.
Thank you. We'll now begin the question and answer session. Anyone who wishes to ask question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Vedant, an individual investor. Please go ahead.
Morning, sir. Congratulations on the great set of numbers. Sir, I'm talking about the consolidated numbers and e-commerce in precision. So from the past couple of years, the e-commerce revenue has more or less been flat. I mean, in 2023, it was 350 crores, and from there, for a couple of years, it has been around 350 crores only. So it is only for this quarter that we have grown significantly. So do we see this growth in the e-commerce continuing in the coming year, FY27? And what percentage we are looking in the growth in FY27 in e-commerce precisely?
Right. First of all, e-commerce, yes, you are right. We have been on a plateau for some time. Of course, the growth, as you pointed out, has been in this year. Now, we have always been looking at e-commerce in terms of incremental growth, because it is not something which will lead to a very high growth, which is one of the reasons why we have been trying to consolidate and also look for areas where we can organically grow by developing other verticals. So as far as e-commerce is concerned, here on we shall definitely be looking at growth. It will not be fair to put a number to it, but the attempt shall be to maintain a double-digit growth if possible.
Okay. So secondly, the other revenue streams which you are streamlining have been working from the past couple of years. So there's this stream EPR trading platform where electronic trading platform for EPR certificates. So
Correct.
EPR trading platform plus other avenues which we are planning to develop. Do we see the revenues from these streams coming in the FY27 onwards? And if you can be precise, how much or more or less what amount of revenue shall these streams generate in totality?
Again, as I said, it would not be appropriate to give numbers at this stage. Let us look for the platform to get operationalized. As I said, it's complete, it's ready, it's integrated, it's waiting for to go ahead to operationalize. And over the first 5 or 6 months, we should be able to assess what would be the revenue streams from these platforms. But as I said, we are very positive about the fact that it should contribute significantly to our revenues. Maybe to start with, the year I go on.
Okay. So, if I may, how significant is the electronic trading platform, the EPR certificates trading, in India as per se? I mean, this is very new for me. I have new to about it. I tried reading about it too. But is it significant? The revenues would mean something to our top line, sir?
Obviously, this will the revenue in the form of the fees and the charges that MSTC earns, it will add to our top line as well as the bottom line. So that CMD was explaining. So with the digital thing been very emphasized with the government initiatives. So we are very much hopeful that we will have a very nice impact on our revenue stream.
May I supplement that also? Now, there has been a complete thrust on, transparency and fair price discovery in all kinds of sectors. So this is something that basically enables that end. So this is something that is definitely bound to grow.
Okay. One last question, sir. Actually, when I see the segmented revenues and the results in consolidated, so there's this third stream. So I've lately, started to track your company, and my question might sound naive, but I still nevertheless will carry on. So there's this third head called others unallocated. So there have been losses in this stream from the past couple of years, and the losses have been significant. What is our plan of action to mitigate these losses, or probably, get done with them? How do we go about it, and what are these actually?
Yeah. It is basically, if you see, it is not a loss at all. What happens, though we had our two segmented, primary segmented right now, as per accounting standards stipulated in India, which is trading and e-commerce. But our expenses and overheads are not, maximum of the expenses and overheads are not directly related to each of the particular segment, because each of these has all the jobs of either equally trading and the e-commerce. So that's why the unallocated portion is where there is no revenue, but there are only expenses. That's why it is a loss. And ultimately, you have to see in totality how the company is doing, how it is selling. So this accounting thing will also come to an end if the accounting standards permit, because we are going to we have already decided to close down our trading vertical, and the revenue stream will also come to an end with the first quarter this year. So there will be only e-commerce segment. So here the allocation will be proper, and you get a correct, this type of whatever you are giving, this allocation will be properly directly allocated to a single segment, and we can then arrive at the segmental profit or loss, whatever it is.
Okay. So if I am understanding you correctly, so right now, whatever the losses are, will certainly reduce in the coming future as the accounting standards set in line.
Yeah. Just sorry to interrupt you, sir. These are basically not the losses. These are the unallocated expenditures that are not be allocated to any particular segment. So when there is a new segment that is coming up, so there is some type of unallocated thing will not be there, and we can have that single segment profit and loss. That's my good point.
It is an expenditure and not a loss actually.
Okay. Thanks so much, sir. Best of luck for future, and I'll be looking forward for the next conference.
Thank you. Thank you.
Thank you. A reminder to all participants that you may press star and one to ask question. As there are no further questions from the participants, I now hand the conference over to the management for the.
Thank you. So, as to sum up, would really like to express my gratitude to my team as well as to all stakeholders. We are all going through a difficult time, as I said, globally, macroeconomically. A lot of uncertainty looms. But despite that, the numbers have shown a very healthy growth at this year. And we are working on a lot of new areas, which we hope that over the coming fiscals and will certainly lead to a good, strong growth for MSTC, consolidation of areas and organic growth, leveraging the areas that we have seen. So once again, please do keep asking us. That helps us to improve. Thank you very much.
Hi, sir. Sir, there are two people joining the queue. Would you like to take them?
Certainly. Certainly.
Okay, sir. The next question is from the line of Harish, an individual investor. Please go ahead.
Hello. Hello, am I audible?
Yes, sir. You are. Please go ahead, sir.
Yeah. I just wanted some clarity on the EPR trading, right? Could you give us the number, what was the total amount of EPR traded last year? So that would give us an idea of the market, because the numbers total. Yeah,
please.
Because the numbers floating around, I mean, I was doing some research and the numbers are making way too high. So I just wanted some understanding.
So Harish, that is basically why the government, I think, wanted a transparent e-trading platform to be put in place, because whatever are the numbers are not collated or compiled in any particular place. So an accurate assessment of what are actually the numbers is not possible at this stage. But once this platform gets underway, over a space of 6 months or 8 months, it should be possible for everyone to know and for that information to be then clearly available in the public domain as to what are the actual numbers and what would be of course, the values would then get discovered.
Okay, and our revenue from this
that they are significant.
Okay. So significant, are we talking in hundreds crores or the total market? Or
It's
in
not
thousands?
fair to put numbers. So that's a very leading question, Harish. So, which is why I think we should wait, have a look at what is the traffic through the portal for the first 6 to 8 months. And that question will then automatically get answered there.
Okay, and would our revenue be a function of the total transaction value or would it be event?
No, it will be just on the fee basis. So basically, we will have some kind of fee on the transaction. So that will be part of the top line and bottom line. Of course, that will be our revenue. Not the
Fee. Okay, per transaction fee, basically like other exchanges, essentially.
Right. Yeah, absolutely right.
Sure. Thank you.
Thank you. The next question is from the line of Saket Jain, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. Am I audible?
Yeah, absolutely, Saket. Please go ahead.
So I just want to know, as per the Vahan portal, the scrappage for the year was around 2 lakh volumes. And the opportunity which was highlighted in the Niti Aayog portal published in January 26, they were appreciating that it will be around 1 crore volume for the year. So it's almost only 2% of the total scrappage potential. So can you brief how we are able to tap that market and what are the roadblocks, and is that we be able to remove the roadblock by the ELB policy which is already in place?
Right, Saket. So, first I think you need to be clear about that MSTC is a small part of the major ecosystem of ELB scrappage in India. Major stakeholders in this case happen to be the states who have to put in place certain regulations, regulatory framework as well as facilities to be able to tap the market of ELV for ethical and controlled scrappage. Now, that is something which is an evolving landscape. It is happening across states, but obviously it has happened at a rate slower than what was originally visualized. Now, as far as when that ecosystem is in place across, now MSTC portal is the one which is mandated for auctioning those end-of-life vehicles, and those are then taken up for purchased by different RBSs, who then go forward with the process scrappage. So as far as the arising and feed of vehicles is concerned, this would be dependent on the policy framework and the incentives that are put into place by the government in a federal structure through various lists and so on, based on the guidelines which have been issued by MORTH. And once those are available, those are available to people, the flow of vehicles through the MSTC portal would also increase. So we would develop as a part of the overall ecosystem developing and would not, really be able to be the primary driver.
Because just follow up on that, are we seeing a traction? Because in the last year, in 24-25, it was only 70,000 vehicles which were scrapped by, over the year, and the current year is almost more than 2 lakhs. So are we seeing a traction?
One of the factors which is driving this is basically the APR policy coming into place for manufacturers. So a bit of that traction which is happening for the increase is being driven by the OEMs. And we expect that to obviously substantially increase, which would help to basically formalize the scrapping which is happening mainly today through the grey market. After all, vehicles do get scrapped, isn't it?
Okay. Fair enough. Just one more question to ask if time permits.
Please, sir.
Hello. So I've just read in the news article where SBI CAPS is the financial advisor for the Kolar Goldfields auctions, KGF, gold mining, the 33 tailing dumps. So will MSTC will be also being a participant to that, or?
We have been working with the Ministry of Mines as well as with the SBI CAPS for multiple such opportunities. And at the appropriate stage, it will be notified by the Ministry.
Okay. Fine. Thank you so much. Thanks for the opportunity.
This is an area we do work in.
Thank you, sir. The next question is from the line of Harish, an individual investor. Please go ahead.
So I have some follow-up questions. So we're hearing about a new coal exchange coming up. So how will that impact our coal auction revenue?
So this is something at the very, very initial stages, and we shall be watching these developments closely to see how they impact our revenue streams going on. Coal does form a significant part of our revenue streams. So this is something that we would be obviously watching closely and also taking appropriate decisions to try to be a part of that ecosystem as it is at a very initial stage, and obviously the evolution would happen with all the stakeholders being taken into confidence.
So, but essentially we will be competing for the same volume, right, in the spot market?
So we are still nobody is at this point of time certain about how the entire ecosystem is going to evolve. Stakeholder consultations are on.
So once that comes into the realism, and if there actual things are going to happen, there are a lot of points that are being deliberated on that particular ecosystem. Then only can come to know when and where it is going to impact us. So as of now, it is very difficult to assess how it will work and where it will affect us.
Okay, and so if I look at the business, the organic business minus the EPR vertical, which will come up from this year, how do you look, 2-3 years ahead? How do you look at the organic business growing?
So as I said earlier, this would this is a area where we have been looking at plateaued growth over the last some time. And our attempt will definitely be for a double-digit growth on the way forward. It will not be a very, very high growth. It will be incremental growth, and we should be aiming at double-digit growth on the way forward.
So double-digit growth on the handle, like the organic business, or does it include the new verticals kicking in?
We are talking about organic business. That is obviously the e-commerce business. And putting a number to it, of course, would be speculative, so I would not like to do that at this point.
Okay. So essentially, a double-digit growth for the current business, then whatever new business we win will be on top of that.
Yes, that is what would be our attempt.
Okay, sure. Thank you.
Thank you. A reminder to all participants that you may press star and one to ask question. The next question is from the line of Urvish Kothari, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. Sir, my question is on the EPR portal and the portal that we are developing for travel, which we are competing with Balmer Lorry, right? So what is the current state of the... Sorry, I joined late, so you might have covered this question. But what is the expected timeline to go live for the travel portal? And right now, I think Balmer Lorry is clocking around 250 crores of revenue yearly. And what we are targeting and what are our plans to penetrate this market?
So obviously, our offering is what we should be, we are looking at to be able to make a significant dent in this market. Our portal, the travel portal, is in our final stages of testing, and we should be able to launch it for the B2B segment in some time. As far as revenue is concerned, that is something which we would not like to speculate about at this stage, but we see it as a good business opportunity, which is the reason that we have decided to develop.
Okay, so sir, we are planning to live this in quarter 1 or quarter 2? Travel portal.
We are already in quarter 1, and as I said, we are in the stages of testing it. We will be rolling it out as quickly as possible, naturally.
Yeah, and sir, for ERP portal, EPR portal, are we planning quarter 1 or quarter 2 go live?
That is, as far as the portal is concerned, it is ready, it is integrated, and we are waiting for a go-ahead for it to get operationalized.
Yeah, I can see that they are showing EPR portal as trading will be shortly started. So I just wanted to confirmation from you. On live portal, I can...
I'm not in a position to give that confirmation because it is not MSTC's decision.
Okay. Okay, I think this is all from mine. Thanks a lot.
Thank you.
Thank you. A reminder to all participants that you may press star and one to ask question. As there are no further questions from the participants, I now hand the call to the management for the closing comments.
Thank you. And as I said, I really appreciate the questions because this is basically makes us question ourselves and look for what we are doing right and what we are doing wrong. So please keep them coming, and we hope to do better for you and your company in the coming quarters and in the coming fiscal. Thank you very much.
Thank you.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you. Thank you. Good day.